Hello there, many thanks for joining us in our Tuesday Business News Report. It's now time to bring you the feature on the show today. Now, the World Bank says increase in fuel subsidy puts the Nigerian economy at a high risk as subsidy payments could significantly impact public finance and pose debt sustainability concerns. Now, the Washington-based lender, in a new biannual report known as Africa's Pulse, disclosed that increase in fuel subsidy poses a high risk to the country's economic growth despite the increase in oil prices. Now, according to the bank, Nigeria is projected to have a 3.8% GDP growth this year, adding that as an oil-dependent country, weak oil production hampers economic recovery. It also notes that the high cost of fuel subsidies due to the increase in oil prices may deteriorate the country's fiscal balance. Well, joining me now to discuss this and much more virtually, I have Mukhtar Mohammed, the Chief Executive Officer of Finance with Mukhtar. Thank you very much for joining us on the Breakfast Show this morning, Mr. Mohammed.
Good morning, David. It's a pleasure.
Now, over the last 2 decades, fiscal deficit really has remained a predominant occurrence. Nigeria's fiscal deficit for last year amounted to 6.45 trillion naira. This year, it's poised to hit 7.35 trillion naira according to government estimates, but some forecast this would even pass the 8 trillion naira benchmark, considering how much the NNPC is demanding for fuel subsidy. How problematic or challenging would you say is the provision for subsidy, which we've seen increase ninefold? This is already taking about 4 trillion naira within our budget for this year.
Yeah, David, talked about the subsidy some while ago, and I said it's a good decision for government to remove subsidy because subsidy is not helping the economy, neither is it helping the poor. Okay, now let me tell you how huge this is for our economy. In 2021, the value added tax and company income tax altogether from federal inland revenue was 3.9 trillion naira. 3.9 trillion. So what we are spending on subsidy alone is more than what we generate through value added tax and company income tax. Then remember also, we also saw that playing out in the federation account also, where the NNPC projection was 2.51 trillion. And at the end of the day, they were only able to bring in 552 billion to the federation account because of the payment in terms of subsidy payment, the subsidy. So it's a huge gap, and like you said, if we have a deficit of 3-point-something trillion, then we should be looking at a higher deficit this coming year because of that. And remember that the production output has been brought down from 1.8 billion barrel per day to 1.6 billion barrel. That is according to the National Assembly at a benchmark of $73 per barrel. And presently, if you go by that data, we are only producing $1.2 billion per barrel. So we already have a shortfall of about $4 billion a day. And that is going to affect our revenue also. So you could go on with those figures and you realize what a terrible stage that we are as a nation.
And talking about the stage we are as a nation, it seems your posit here is also aligning with that of the World Bank, which is also projecting Nigeria's economy to grow by 3.8% this year. But it still insists that as an oil-dependent country with very weak production, this would definitely hamper our economic recovery. How do you see us faring really as we are going into as we are already in the second quarter, going into the third quarter of the year, and we started off very shaky with the first quarter?
Well, I don't think we should expect anything different. Because, like I always say, the cost of production have gone high, either through inflation figures or through the manufacturing sector, especially having to go up with energy crisis, whereby even the diesel has skyrocketed by over 300%. That is going to affect in terms of cost of production. So it's going to increase the price of goods and services. Then we have the exchange rate volatility, which most manufacturers depend on because of the bottleneck and the time involved in getting from the federal, the CBN window. So when you look at that and at the parallel market, as per the close of work on Thursday, it was selling for 590 for an exchange for $1. So you could see that if you look at those numbers and with what we've experienced, then you should not be smiling. You should be thinking that when those numbers come in the second quarter, we expect it to be,
okay, Mr.
not to be very positive.
For the lack of time now, let's wrap up our conversation. Do you think we're going to see, like we already see, the timeline of an extension of 18 months? This is really the direction of the government. This marks the last lap of the Buhari administration. To what extent do you think this would also affect creating a new slate for the oil and gas sector, especially with regards to petrol subsidy for the new government? In just about 30 seconds, please.
Maybe it's going to be, it's not that this government is going to push it to the new government. The new government is going to come up and begin to deal with subsidy issue, whether to remove or not to remove, whether to go against the masses or not to go against the masses. Okay. Remember, the PBI bill also is not into law. As it stands now, it has been suspended for 18 months. So it's just like postponing the evil days. We will still come back to this, and maybe we'll come back to it at a higher rate. Remember that this decision was made because of the political. For me, it was a political decision rather than an economic decision. And
the volatility continues to remain in the market, both at the local and global front. We just hope that we'll take the best of decisions going forward. Thank you so much for your time on the Breakfast Show this morning, Mr. Mukti Mohammed.